Hello and welcome to the ISTAT Learning Lab. Today we have Christine Rovelli in the studio in Paris, and Christine is with Finnair. She is the treasurer of Finnair, and she's going to talk to us about airline liquidity planning in times of crisis. Christine has been with Finnair since 2014, and before Finnair she worked with a number of different banks. She was with ABN AMRO, with CIBC Oppenheimer. She was with ING and with Citi and Morgan Stanley and RBS, working in the transportation and aircraft financing. Christine is also a member of the IATA Treasury Working Group, and she is on the board of trustees of the ISTAT Foundation. Christine is also a long-distance runner, and as you may have seen if you dialed into the ISTAT chats with Bryson and Christine, she's also a master chef. Before I hand over the microphone to Christine, let me just remind you that on September 8th, we have Marianne Riggi from Kroll to talk about airline ratings and bond ratings. And on September 22nd, we have Shannon Ackert from Jackson Square talk about aircraft and engine maintenance. And on September 29th, we have Ronan Doyle from PricewaterhouseCoopers to talk about lessor accounting in times of crisis. I also wanted just to remind you that you can post questions during Christine's presentation. You click on the little round button at the bottom of your screen with two call-out bubbles, and then you can write in your questions. And to the extent we have time, we're going to go through these questions with Christine. You can also make Christine's slides larger by clicking on the corner and drag the corner out to make that frame bigger. Or if you want to see more of Christine, you can drag that video panel and make that frame bigger. And I also want to encourage you to check into previous learning labs from ISTAT that are online. You go into istat.org online and you can view past recordings, and that's open to everybody. So with that, I say peive and welcome to Christine Rovelli.
Great, thank you. Nothing like a little pressure. All right, so let me first adjust my screen so I can see my own presentation. Hopefully you guys can make me quite small and make the slides quite big, because I worked very hard on the animation and this is not my general thing. So we're here to talk today about airline liquidity and trying to plan in times of crisis. It is almost an oxymoron, but I'm going to do my best. As Neil said, there's an ability for you to ask questions as we go along, so don't be shy. I will get to as many as I can at the end. This isn't actually a very long presentation, so hopefully we will have time for lots of questions and we can do some deep dives on some of the stuff that I do actually cover. So with that, we'll start with a little bit about me. I suspect I've met many of you before, either as a client or various functions, but just to give you a sense of perspective as a treasurer, I thought it would be helpful to give you the basics. So I started my career in banking in the mid-1990s. Thanks, Niels, for listening. Probably every bank I've ever worked for. Spending a brief time in Chicago in management rotation program, where among stints in such exciting teams as metals and mining, FX dealing, and infrastructure, I somehow landed in the aerospace team. I had always loved planes. My parents used to take me to O'Hare as a kid to watch the planes take off. And because my family rarely traveled, all I knew about flying was that it took people somewhere fun, or at least that's what I imagined. But until I landed in the aerospace team, modeling cash flows for WTCs, I didn't realize that finance skills could be combined with a career in the industry. I mean, I know it sounds crazy. How else would you pay for airplanes? But I never really thought about it until that time. The problem was that most of the jobs doing that were in New York. So in 1997, I picked up sticks and moved there, staying for the better part of 10 years. That's where I saw the first two major market disruptions in my career, the dot-com crash in 1999 and, of course, 9/11. In 2007, I moved to London just in time for the crash in 2008-2009, still in banking, still covering broader transportation. And it was really there that I realized the limitations I was facing vis-a-vis what I wanted to do versus what I could continue to do on the advisory side. I love to solve complex challenges for clients, but once the deal was closed, I didn't see the implementation or manage the impacts on the functioning business. So I started to think about moving to the client side as the bank I worked for decided to shut down its investment banking practice. And in 2012, I moved to Finland to work on a project basis for Finnair, first in the resource management group, and then in a variety of finance and strategy roles. And I became the treasurer almost 4 years ago. So that's me. This is not me. I'm not a pilot, as many of my industry colleagues are, or an engineer, or quite obviously inflatable or a man. So let's jump into what I'm going to talk about today. There's a lot of interest in airline liquidity these days, but in the many conversations I've had with suppliers and financiers, it's clear that liquidity means something a bit different to everyone, or what is acceptable as liquidity is different. The accounting definitions are pretty straightforward. I'll also talk about why it's so important. Just 12 months ago, I was talking to investors trying to defend the level of cash on the balance sheet because it was seen as inefficient. Now those same investors are asking how we can raise more, even though we were close to the same levels as we had last year. Of course, we can all understand on a high level why it's good to have liquidity, but it's the second order impacts of shocks, and sometimes even the third order impacts, that have the potential to really squeeze companies. Then I'll talk about some of the main parties who care about liquidity and what they can do if they don't like what they see. Then I'll cover where you can actually find liquidity, this in a normal environment, if there were ever such a thing for an airline. And finally, I'll give you some insight into the Treasury equivalent of alternate law, which is what happens when the day-to-day playbook doesn't apply. Then, of course, as I said, we're going to take some questions. So let's get started. First of all, where is liquidity? When we look at a balance sheet, under current assets, they're all listed in descending order of liquidity. Cash is first. Then investments with a maturity of between 3 and 12 months. Then longer term investments. You can also have restricted cash here if it's not buried in a note somewhere. But for now, that's what we're working with. So given all that, what is liquidity? Normally, cash and short-term investments are considered liquid funds. So anything you can get your hands on within a few months is counted by many creditors and counterparties as liquidity. That's why you can sometimes see fairly low levels of actual cash relative to short-term investments, because it's often more efficient to deploy your, let's call it additional rather than excess cash, because as a treasurer, I really believe you cannot ever have too much cash. Additional cash into money market funds or similar investments to try to limit the damage of negative interest rates that, at least in Europe, we've been experiencing for the past few years. That's all fine when market conditions are normal to weak, but as soon as things start going seriously south, two things can happen. First, suppliers start demanding upfront payments, which forces treasuries to liquidate investments, and then, here we're into second order impacts again. If enough treasuries do this, you start having problems with redemptions in some of these funds, which means that actually money you thought could be available in 3 months might not be. So in a pinch, the only thing that's liquid is actual cash. I'm not the only one who has worked through more than one crisis. So once we're in that scenario, suppliers and counterparties start focusing on that first line, not anything underneath it. And they all want their money before it runs out. Which brings me to my next slide, which is the foundation of a treasurer's job. So there are a number of reasons that liquidity is important to a treasurer, and the primary one relates to the basic function of a treasury. This may seem overly basic, but as we go along, I hope you'll realize why it can be so much more trickier than you think. I'll give you a hint now, though. A treasury can only create cash. We can't create revenue. So revenue is where cash flow starts and a critical component of providing funds. The availability of debt financing, at least in the aviation world, is highly dependent on the perception of a company's ability to pay that money back. It's a cyclical industry, so debt secured against assets is also another form of payment expectation. But first and foremost, lenders expect to get their money back, not their asset. There's also equity financing and other exotic products, but those investors too expect to get compensated for giving companies money. Most, if not all, companies have both fixed and variable costs. So there are things you really ought to pay for, such as new airplanes, simulators, and other capex for the business. Things you have to pay for, like salaries and jet fuel. Things you need to pay for, like debt repayment. And things you can pay for, such as dividends. The advent of power by the hour pricing for all kinds of things has helped to shift fixed into variable costs, which is good in times such as these, when airlines aren't flying as much. But the point is that you have many more uses for funding than you have sources, kind of like in real life, and not all of these uses are discretionary. So I need to add another layer of complexity here, because while any cash is unquestionably good, cash in the airline industry comes in many different currencies, many different channels, and can be subject to a number of translations along the way. So let's look at an example. Here's Jane. This is all pre-COVID, of course. Jane is Norwegian, and she's on a work trip in the UK. While she's there, she decides to go to Australia for her upcoming vacation. I'm sure many of you have done something like this without a second thought. So Jane goes online, finds the ticket she likes, and buys it. So the marketing carrier is Airline A. She's going to stop in Helsinki and then take the operating carrier, which is Airline B, for the rest of the way. Now she buys it online, but what she doesn't know is there's a Swedish travel agent behind it, and the ticket she buys is priced in British pounds because she's sitting in the UK when she buys it. But of course, she's Norwegian with a Norwegian credit card, which she pays in British pounds. So, lucky Jane, off she goes to Sydney. But where does her money go? Okay, so here's Jane. She goes to Sydney. She paid her credit card bill in Norwegian kroner. She's done. So, but let's follow her money. Her point of sale is in the UK, so it's priced in British pounds. Had she purchased the ticket directly from the airline probably would have priced that ticket in pounds. And so from a revenue reconciliation standpoint, we're all good. But she purchased it from a Swedish travel agent whose contract with the airline stipulates settlement in Swedish kroner. But they're receiving pounds. And so what date do they use for the translation? The ticketing date or the settlement date? With relatively stable currencies, this isn't critical, but for very volatile ones, it can be. Okay, so the travel agent takes British pounds, but Jane paid with a Norwegian card that bills her in kroner. Jane could have chosen to pay in pounds with dynamic currency conversion, or pay in NOK with dynamic currency conversion, but she recognized the exchange rate would probably be better if she didn't. Jane's credit card issuer isn't taking any chances here. She's going to pay a 3% surcharge on any foreign currency transaction. So the airline here has Swedish kroner and its reporting currency is in euro. What's more, it needs to pay its codeshare partner for that leg of Jane's trip. And that contract with the carrier stipulates settlement in dollars. I should add here that it's a settlement system with IATA that cleans a lot of this up, or can for airlines that use it. But now you see how just one ticket can get complicated. And that's before it's changed or refunded. So before we get into that sort of fun, let's just look at who does what in this scenario. From Jane's perspective, it's pretty easy. She buys her ticket, usually well enough in advance that she pays for it by her credit card before she travels, and off she goes. From the airline side, it's a bit more complex, but it's a known path, and the systems are well set up to handle it. You load the fare. Point of sale is UK, so it's loaded in British pounds. The fare is purchased in British pounds. We had a little wrinkle here, so we receive the cash from the travel agent in Swedish kroner. We book the ticket receivable in euro because that's the reporting currency we use. We deliver the travel. Jane goes somewhere. We can then book the revenue, and then we settle with the codeshare partner in US dollars. But what happens if life happens, or COVID? In scenario 1, the airline cancels Jane's flight after she buys it, but before she pays her credit card bill. In scenario 2, the airline cancels Jane's flight after she pays her credit card bill, but before she's supposed to travel. The first scenario was relatively rare for leisure travelers, though there were some last-minute city break travelers that fit this description. So in the time before she pays her credit card company, she's really relying on the airline to refund the money. But once she pays and hasn't received the service she paid for, she has an additional method of recourse, a chargeback. And it is these transactions that have been quite challenging for airlines over the past few months, because in most cases, the card issuer just takes the money back, or more likely doesn't pay it, the airline, while it is investigating the case. In the event that the airline has canceled the flight, the passenger is due a refund. But given the volumes we've been dealing with, the waiting time for a refund can get quite long. People get fed up waiting and initiate a chargeback, even though the airline is still processing the refund. If enough people do this, and the airline isn't selling many or any tickets, cash starts dropping quite quickly. So, pre-COVID, airline revenues were net positive. That means that more tickets were being sold than being refunded. Somewhere around March, for many airlines, that formula flipped around, and we were refunding more than we're taking in from selling tickets. So, for most purchases, people go back to whoever sold them the product when they want a refund. But for travel, that can be different. Often they go back to the airline, regardless of whether they bought their ticket from the airline or not. But the airline might not have the passenger's money yet, depending on the settlement cycle, and it's often up to the seller to refund the passenger. But sellers too often operate on the basis that there will always be more revenue than refunds. And rather than remitting funds from the sales back to the airlines and then billing for a negative difference, some sellers just stop remitting cash. This can happen in settlement systems between airlines too. If an airline is in debt and doesn't clear it, then it may not receive funds from further ticket sales until that debit is gone. Credit card acquirers process payments on behalf of merchants, such as airlines, so that we don't have to have individual accounts with each issuing bank. For Jane's airline ticket purchase made with a credit card, that means that whatever acquirer an airline uses, and there can be more than one, there usually is more than one, they will collect the funds from the bank that issued Jane's credit card and remit it to the airline. But again, if the acquirer sees that refunds are exceeding sales, it can choose to withhold. In industry terms, this is called a holdback, some or all of an airline's cash to ensure that it has sufficient funds to settle any payments it may need to make on the airline's behalf. Since the vast majority of airline tickets are purchased with credit cards, this is a significant source of cash to an airline, and throttling it has a very immediate effect, not a good one. So I talked a little bit about movements in currency pairs and how that can influence reporting cash. But I also want to touch upon something that even happens outside of global crises, such as COVID, which is trapped cash. This means that you've sold a ticket, collected the cash, but you aren't able to move it back to your central treasury account. This typically happens when tickets are priced and paid in hard currencies, which are valuable to some central banks. The cash is there, you can see it, but you can't get it out. What do you do then? Well, a lot depends on the country, how important the destination or destinations are to your network, and what is behind the inability to transfer funds. I'm sure your first instinct is just to stop flying there until you can get your money out, but then you'll probably leave some passengers there, who you'll have to reaccommodate somehow, and if you stop flying there, you will probably still have expenses, such as ground handling and catering contracts, and your negotiating leverage to release that cash is much worse. It's unlikely that you're the only one whose cash is trapped anyway. Other airlines will have the same issue, and other industries probably will too. Your best bet in this case is to work through industry bodies such as IATA, which can be effective. But the best cure is always prevention, so if you can, sweeping cash back to headquarters more regularly will ensure that whatever can't escape is minimal. To understand all of this, we also have to understand working capital. The definition of working capital is just current assets less current liabilities, and it's meant to capture a company's operating liquidity. So let's start with the balance sheet. A passenger books a ticket and pays, which means cash to the airline, generally. The flight hasn't happened yet, so a liability is created. Over to the cash flow statement. Airlines typically have negative working capital because the time lag between when a passenger pays for a ticket and we receive the cash and when they actually fly and we can book the revenue can be months or more. It's negative because we have to create a liability when we sell a ticket and before the passenger flies. What we call it differs from airline to airline, but practically it's just unflown tickets. When the passenger flies, the liability is reversed. When an airline is growing, or at least not shrinking, it is selling tickets for flights that it hasn't flown yet. Those are great because you have all the cash, but none of the associated expense of operating the flight. But at the very least, are not often canceled. So that magic of just-in-time cash tends to work. What we've seen during COVID, however, is a large number of cancellations and little certainty as to whether flights would be or could be rescheduled. Many carriers heard the giant sucking sound of cash being sent back and hailed vouchers is the answer, because that meant there was no cash out today. The problem is, when you restart flights, and with them you have the cost of operating those flights, you don't get any cash in either because the vouchers are being used. It's a tough spot to be in, and strangely, the fact that passengers are now booking so much closer to departure could, if kept up for the long run, match the cash and service delivery cycles a little bit better. But the adjustment period is very painful. So, let's stitch this together. The passenger buys a ticket, pays, the airline receives cash, books a liability for future travel, which triggers a change in working capital. The passenger travels, the airline books the revenue, reverses liability, and working capital changes the other way. When an airline is growing, opening new destinations, they are bringing in cash for flights that we don't have the associated operating expense for yet. That's why growth flatters airline financial metrics so much. The problem with that is that you have to keep growing for this effect to persist, which isn't practical. Or you have to keep your costs from escalating, or make them all variable, which is also not very easy. So now look at what happens when an airline cancels a flight and needs to pay a refund. Cash goes out, but the liability goes down because we no longer have to provide that flight. Working capital changes, dragging operating cash down with it. And guess what we need to pay refunds? Cash. Not just operating cash, of course. We have financing and investing cash, but it also isn't sustainable to borrow money to pay people back. And when you aren't selling many tickets, the cash you should be getting from the tickets you're selling is being held back by credit card acquirers or other counterparties. And suppliers are asking for cash up front. You can see how quickly this can get very serious. So while us poor treasurers are dug in the trenches trying to manage critical cash resources, we also have to take the time to communicate with other stakeholders who are focused on liquidity. This is going to be pretty much everyone you owe money to or want money from. And the default rallying cry is cash now. So as we've just discussed, whatever cash there is now has to first be collected. And if everybody's demanding cash, then it's a matter of either having very clear documents with or a very important function to where you owe it to. This is the time we start thinking about the mountains of contracts we've negotiated, down to those tiny little sub-clauses referring to such drastic events that the only way you sign it is to convince yourself that that particular chain of events has never happened and is unlikely to, like negative revenue. Well, here we are, and all your creditors are reading the headlines about how the airline industry is absolutely sideways, and that counterparty who always used to take you to lunch is now copying their legal counsel in all their correspondence, which usually starts with, "It's unfortunate that." So this is not where you want to be. In the middle of your poltergeist room, stuff flying around everywhere, as a treasurer, your only option is to get on the phone, start calling your counterparties, and offer to talk to them, their counsels, their credit committees, anyone else who will listen through what's going on and the company's plan to address it. This is not easy, but this is necessary, and you have to do it more than once. You have to do it pretty much any time someone asks, and they will ask a lot. And they will be as frazzled as you are, and they will sometimes confuse you with a competitor because they've been trying to review so many files. Maybe the news is not good. Probably the news is not good. Certainly you don't have all the answers, but now is not the time to stop answering your phone or trying to send emails with this stuff. With COVID, you can't really do face-to-face, so you have to pick up the phone. Investors are also important because, thinking back to the slide I showed you before with sources and uses, if you don't have much revenue, you need financing to get cash. And the only people tougher than those you already owe money to are the ones you want money from. So let's play a little game. This is, of course, vastly oversimplifying things, but the main points are valid. So let's say you're looking to raise a bit of money. How do you know where to start looking? Well, you start with the obvious. Are you making money? Yes. Good. The world is your oyster. If you have assets, you can borrow against those. If you don't, you can borrow unsecured. Your investor base will depend on the product that you're using and the amount you're looking to raise. So you'll notice there's a big white space here on the rest of the page. So you might guess that you have options even if you aren't profitable. But if you are, then it's likely you're generating your own liquidity and you might not need to borrow too much anyway. And you'd be right. So if you are not profitable, what is the next query? Have you ever been profitable? That is to say, can you make the case that your lack of profitability is just temporary? Either market conditions, cyclicality, a huge investment program, ramp-up period, whatever. Lenders and investors are going to be a bit more demanding in this scenario, though. They could ask for security. So the next question is, do you have any to give them? Yes? Good. You can probably find some funding. But what if you don't? Well, is it likely you'll ever make money? This is even more risky, but again, there are investors who look for these types of opportunities too. So if you do, hey, it is possible for you to find financing. Good for you. But what if you don't? Now we're getting into where angels, the investing types, definitely don't tread, and you're more likely to see a different winged creature, such as a vulture, looking at you instead. If you're here, it's likely you have some debt already. But how much? If you have a lot, and I know this will surprise you, then it is possible you can get even more. The obvious source is debtor in possession, but the old adage is still true. If you owe the bank 100 euros, it's your problem. But if you owe them 100 billion, it's their problem. And last, if you aren't profitable, never have been, don't have assets to pledge, a security, lack a viable business model, and don't owe much to anyone, well, you're pretty out of luck. So let's assume you're in the lucky position that financing is possible. In times like these, everyone is doing two things: trying to get all the liquidity they can and holding on to what they have. That goes for lenders and investors too. The fun game we just played gives a clue of where to start looking, but of course the best defense is also a good offense. So here are 4 pockets: money you have, money you think you have, money you can get, and money you think you can get. Remember the bird in the hand fable here. So money you have is cash, as much of it as you can hang on to. Money you can get is ready access to cash in the form of revolving credit facilities, commercial paper lines, and any other means of drawing liquidity that doesn't require a new set of documents or, crucially, lender consent. Your payment terms should already have been optimized, but if not, check those too. Because the problem with liquidity scarcity, particularly in a time like this, is that it affects everyone. And even though central banks are running with the taps wide open, plenty of folks are hunkering down and reducing risk exposures. Which brings me to what you think you have or think you can get. This is where the big, bad surprises are. First, money you think you have. That's credit lines for trading, fuel, interest rates, carbon, FX, whatever. Can be guarantees or performance bonds or the infamous credit card payments. When these start vaporizing or being held back, in the case of credit cards, it starts to deplete the money you know you have, and there's already too much competition for that. The money you think you can get comes from selling assets, levering assets, payment deferrals, which is essentially borrowing from your creditors, unsecured facilities, issuing equity or other financial instruments. I'm not talking about savings programs here, because that's usually not in Treasury wheelhouse. The bottom line is that in normal times, what you have and what you think you have are pretty reliable and knowable. In times like these, they can change very quickly. This is why you see so many airlines hauling in so much liquidity right now. So, Where does that leave someone who's trying to stay on top of an airline's liquidity in times such as these? It helps to remember the basics. Only cash is cash. Make sure you know the difference between what you have and what you think you have. All those different currencies and all those bank accounts worldwide and all those counterparties, all those swap lines, you can go from defending an inefficiently large cash balance one month to trying to explain why that exact same amount is enough the next to the same counterparty, who now only sees risk where you once saw opportunity. And it's tempting to give deposits here, guarantees there, thinking you only have to write out a quarter or whatever. But it's clear that this is a long game that requires different tactics. Of course, you never know that at the beginning, which brings me back to the original point, which is you can never have too much cash. Finally, and I have made this point before, this is a people business. Many of us have been around for longer than we care to admit, and it's our relationships when things are good, things are not so good, because after all, this is a cyclical business that makes all of this work so well. Yes, we have contracts and lawyers and strong industry frameworks to guide us, but at the end of the day, people do business with other people. It's easy to be friendly and easygoing when times are good, but when things get difficult, the way you deal with your counterparties will have a lasting impact on how they see you, long after COVID's effect on the industry has waned. I'm not saying you should be nice. We have to make tough decisions that negatively affect people, and that's unpleasant. But remember, things will get better. They do. You'll still need as many friends in this industry as you can get. Good relationships can make the difference between a complicated deal getting done or not. And finally, sadly, a chimera, at least in my world, a money tree. If you find one, please let me know if you don't take it for yourself. So that's all I had for today, and I will now turn things over to Niels for questions.
Okay, before we have a number of questions that will come in, and you can post more because we have some time to go over these questions. If we could just for a minute imagine that we are not in the COVID crisis. And you, Christine, mentioned that before COVID, you had discussions with your investors about maybe you had too much cash on hand and it was inefficient. I mean, where is the optimum? I mean, how do you determine? Because it is true that it's inefficient to hold cash, but it's good to have for a rainy day. So how do you kind of think about the right level of liquidity to have?
You can think about it sort of in terms of the way we think about cash on the balance sheet, right? I mean, if you have some cash on the balance sheet, real true cash sitting in an account somewhere, that's okay. Then you have money market instruments, you have cash that you can get your hands on fairly quickly. Then you have longer term investments, things like that. And, when you need them, they're there, but when you don't need them, they're still sort of outside the Eurozone, at least making a little bit of money for you. You make investments that will allow you to grow and be profitable. That's a good use of cash. Assets that sometimes you can sell when things get rough, if they're only rough for you, not rough for the industry. But really, I mean, determining what is the best amount of cash to have on the balance sheet really depends on what the conditions are at any given point in time and what you expect them to be and the investments that you need to make in order to either get through those conditions or make the most of them, or both. So I wish I had a magic answer for you, but that's why I have a job.
Okay. You mentioned about refunds when flights were canceled. When we had a lockdown here in Luxembourg, where I'm based, I had several tickets booked with several different airlines. And some airlines, they readily refunded. But many airlines just came back and said, we give you a voucher for future travel. And I was thinking, like, can they do that? I mean, is that like a legal framework here that would allow an airline to not refund and then say you can travel in the future?
So my understanding is that the law in the EU is fairly clear that the passenger has to be given a refund. So I don't know if it's illegal, because I know there are some countries who have sort of decided that whatever their airline is doing is okay. But I can tell you that the company that I work for has been refunding folks in cash. Now, the issue that we had is that COVID basically cleaned out the office. There weren't a lot of people working there, and it also cleaned out the office of the company that we use to process the refunds. So there just weren't a ton of people able to do them. And we did get a robot up and running to process the easy ones, the ones where, you booked the ticket and your credit card didn't expire yet and you're the one traveling, et cetera, et cetera. But a lot of these still need to be processed manually. And because as an industry, we tend not to refund more than we sell, we haven't really focused on making that flow very efficient because we haven't needed to. The question is now, do we ever think we'll be back in this situation? And if so, is it worth the investment to reverse those pipes or not? But to answer your question, my understanding is the EU laws, the passenger has to be refunded if the airline cancels the flight.
Okay. Now, clearly, almost all airlines are suffering massively with lower revenues and bleeding cash. So everybody's out there scrambling to raise this liquidity. But at the same time, I think a lot of governments seem to have decided that to kind of keep the economy going, they're pumping in liquidity into the financial system. Not directed to airlines, but buying financial assets and so on and so forth. And this massive liquidity that's being pumped into the financial system, is that making things easier for you as a treasurer to raise money for your airline? Do you see that banks and financial institutions are quite reasonable when it comes to willingness to lend and pricing and so on?
Reasonable. Well, I think the amount of liquidity in the market is definitely keeping up the hunt for yield. And that was true even before COVID. So there was some pretty good terms that airlines were being offered before COVID. Clearly they have degraded, but they are still there. And I don't know, you probably remember from your days at PKR Finance, there were times when there was no money for the industry. And I think the taps being open in this case has allayed that somewhat, because there is still money for the industry. You see deals getting done. We just closed a sale leaseback today, actually. So I think it does help.
And then we also see that the government itself is sometimes directly the party that would provide funds to airlines in either form of equity, loan guarantees, or loans. Now, why do governments do this? Is that because they are the ones that decided on confinements and travel restrictions, or is it because they feel that the airline is important for the infrastructure, or is it to preserve jobs, or is it national prestige to kind of support your flag carrier? I mean, what is the thinking behind the government actions here?
If I could crawl inside a politician's mind, I'd probably not be able to get out. I think it's probably a mix of all of those things. Of course, you want to protect jobs, you want to protect connectivity for your citizens. Air traffic generally has an economic multiplier effect for countries in terms of imports, exports, supporting X number of jobs indirectly for every direct job, and then there's tourism, things like that. So there are a lot of reasons for a government to do it. And it really depends on that particular government's economic agenda or, particular bent, how much or whether they want to give aid to their carriers. And of course, if they have more than one carrier, how do you decide which one? And then are you in the business of picking winners? That's where you get a little bit, things get a little bit dicey.
In your flow chart about whether you could access financing was possible, there was one scenario where you had a crappy business model and you weren't making any money and you didn't owe that much money, and then you ended up with a stop sign, so you were done. Mm-hmm. But you never mentioned the B word, because it seems to me that quite a few airlines are deciding that they can't raise money enough to cover the liquidity bleed, and they choose to either file for bankruptcy in the court or force a restructuring with their creditors. Do you think that is something that is going to happen more broadly than what we've seen to date?
It really depends on how long all of this persists, how much aid there is given to the industry, and to what extent we are successful as an industry in getting our cost structure down so that we don't need to do things like this. Mostly because my impression has been that creditors have been fairly willing to work with debtors outside of a restructuring process. But of course, that can always change. The longer it goes on, the more money you're losing, the less cash is coming in. You know, you're going to have to, as a creditor, start making very hard decisions.
Yeah. And then you have the other effect is that, of course, some of airlines, when they do file for bankruptcy and they reorganize and restructure, they come out with reduced liabilities and lower costs, and then they compete against the guys who try to stay good and meet their obligation and do the right thing. How do you feel about that?
Well, in a way, restructuring exists for a reason. It exists so that companies can, get back on their feet and get back competing instead of closing up and costing a lot of jobs. You make a good point about being able to do that on your own, sort of self-help versus using the courts to do it. U.S. has a much different system, so I don't know if you're talking about the U.S. versus Europe or you're talking about difference within Europe. It would be nice, and I don't think there's an airline management team that enters into a restructuring very lightly, and I don't think they enter into it with the idea that when they come out, they're going to use that experience to just go beat everyone else. I think it's a very difficult decision, and certainly a very difficult process. The end result may well be that they have a better cost structure, but you can argue that an LCC or a ULCC has a better cost structure largely for the same reason. It's either a newer company, so the costs haven't started inflating yet, or it started from such a low base that over time, even as it inflates, it's still running comfortably behind where everybody else is. So, I agree that when companies come out, they can be at a point where they're much more competitive, but it's not just reorganization that does that. It can also be your business model, or it can be the fact that you're a new company.
Yeah. Christine, there are some questions that are coming in from our audience. Sunder has asked two questions. The first one is, he says, it seems that airlines, especially in the US, seem to have access to liquidity. Does it make sense for governments then to bail them out repeatedly?
Goodness, that's a great question for a US airline, I would say. I don't know, really, because at what point do you say, yeah, I have access to liquidity, but it's so expensive it doesn't make sense, or I have access to liquidity, but am I going to borrow money to pay salaries for a long period of time? I mean, is that what you should be doing as a business? I don't know. The government in the U.S., my understanding is, has a program to support jobs, and it's a very focused program to do that. So I guess from a treasurer standpoint, listen, if you're getting me money, I'm going to take it. Wherever hand it's coming from, pretty much. It's tough to say, well, I'm not going to take it from the government because, I can definitely borrow it. Well, sure, I can, but, I have to look, as somebody who's running a balance sheet, you have to look at all different sources, all different prices, all different tenors, and you have to optimize. So it's a tough one for a European carrier to answer.
Are you at liberty to describe a little bit what kind of support you or Finnair has received from the Finnish government to date? That is kind of...
Yeah, well, it's public. They have guaranteed 90% of a 600 million euro loan facility from our pension fund Premia. They have participated pro rata in the rights issue that we had that closed in July. That was about 500 million. So that's the extent of the assistance that we've received from them.
And is there some kind of a furlough program in Finland also that if staff is furloughed, that they will get a certain percentage of the salary from the government?
The government does have a program like that generally for Finnish businesses because of COVID. And then, of course, there's an unemployment insurance program that most employees are also a part of that will help pay their salary if they don't have their job.
Mm. Sandra's second question is, does the ability to hedge revenue help an airline to manage revenue and liquidity? Sandra's heard about a scheme or the infrastructure that Skytra and Airbus are developing together. Okay. Can you explain that a little bit? Because I had never heard about this before.
Sure. Well, full disclosure, Finnair is one of the companies that has worked with Skytra, worked with Airbus as they developed that product. So certainly it would be something interesting for the industry to look at. If you're at all familiar with the Baltic Dry Index, which is a shipping index for dry bulk shipping companies, they use it quite extensively to hedge their revenue, and they use it actually very successfully. So we don't have the product up and running yet, but from what we have seen, it is certainly interesting, yeah.
But how does it work? I mean, can you just describe that?
I think probably Skytrain is in a better position to explain the nuts and bolts of exactly how it works. But you know, it basically looks at different flows of traffic, different sort of, let's say, markets. You know, and the average revenues on different markets, and you can, you know, there are indexes that you can, well, be able to buy or sell in order to hedge against, you know, your expectations of your revenue on that same traffic flow, basically.
So this would allow you to kind of ensure stability in your revenues rather than facing the ups and downs.
If I have understood it, the way it works for, I mean, the Baltic Dry Index, yes. And it's patterned on that, so yes, it should.
Okay. Aurelian Kaufman is asking, what is your view of Airline Defenders share buybacks and the controversy around them after the COVID outbreak began? Will this strategy still be accepted by stakeholders in a post-COVID environment?
So you're talking about share buybacks by airlines or lessors or both?
I think this is airlines/lessors. So I guess.
Well, it's up to the shareholders to decide if they think it's a good idea or not, because of course they can make their views known at the AGMs, or you know, they can sell the stock if they don't like the policies. You know, there's a time for share buybacks, and there's a time when you have a better use of your cash. So I would imagine that's more up to an investor really than a treasurer.
Yeah. And Ethan Abraham is asking, do you feel airlines are doing enough to control their monthly, daily cash burn to conserve their liquidity position, or can they be doing more?
Well, you can always do more. The problem is, as I illustrated, you have a lot more hands that are reaching for it than you can possibly keep away. And I'm not talking about sort of your fixed costs of, you know, having a building and having, you know, the things that you need to actually have the company itself. I'm talking about suppliers and OEMs and different providers and things like that. So there's always more you can do. But, you know, again, at a certain point, if you want to make all your costs variable costs, which, you know, you can do that as much as you possibly can, you know, that's a little bit inefficient too, because then you have to fly a lot in order to make the economics make sense. I mean, as I illustrated before, the more you grow, the more your working capital and cash flow are flattered, because, you know, you're always booking the cash before you have the expense. So when you put that mechanism in reverse, you know, it's, you know, the cash goes out quite quickly. You got to hang on to it as fast as you can. You got to find every way you can to do it. But at the same time, a lot of these guys, you know, you can't afford to really irritate them. So there's a fine balance to strike.
Antonio Cesaro has asked, how do you view the legality of government funding in the context of EU airline regulation? Now, that's an interesting question.
I'm not sure what that means.
I think that what Antonio is referring to is that there are restrictions in the EU on state aid towards companies, sure, right? So that everybody is playing on an equal playing ground. But it seems that there has been a little bit maybe stretching of those rules during this pandemic.
I mean, the EU has to sign off on all this, and they have. I mean, they signed off on the Lufthansa aid. They signed off on ours. They've signed off, so, it's not for me to decide whether or not the EU is on the right track here. They have approved all of this stuff.
But are you under the impression that the EU is being more flexible during this crisis?
Well, there's a temporary framework generally for the COVID crisis. So they have come up with something that allows them to respond to this crisis. It's not just for the airline industry; it's for all companies. So, in that sense, yes.
So it's almost like there is a special regime during the COVID crisis.
It's called a temporary framework. Yeah.
Okay.
Mm-hmm. Yeah.
You, Katharina, has asked, could you illustrate an airline, if any? Could you illustrate an airline, if any, that best survived the last crisis in 2001 and 2008, and how it did that? Okay, well, this is a tough one.
No, I actually can't, because I'm trying to remember an airline. I mean, of course, there are flag carriers that are still around, but they are nowhere near the companies that they were in 2001. That's mostly down to consolidation. So, I mean, I guess you would be talking about a U.S. airline, because 9/11, clearly impacted that industry quite a bit. But there's been so much consolidation. It would be hard to pick one, because they've combined mostly since then.
I mean, of course, the mind comes to the U.S. airlines that did file for bankruptcy under Chapter 11. I mean, I think the majority of them actually did that. And then they come out of that, and they are still United Airlines and so on and so forth. And it now seems that, although I don't think any of the major carriers has filed for Chapter 11 yet in the US, there are other carriers that have filed for Chapter 11 in the United States because they have assets there.
Yes. Correct. Yeah. Or Chapter 15, or other forms of the bankruptcy protection in the US.
Yeah. Grit Ciara, I'm not sure how to pronounce the name here. Where do you find the biggest support in keeping cash in the company these days? Do you find the support from the lessors, the OEMs, the banks, or the governments?
Oh gosh, keeping cash in the company.
Yeah, well, I mean, in terms of providing support, who are the nicest people to deal with, all your creditors? Are they the lessors, the banks, the governments,
the nicest people,
the suppliers?
Oh gosh, putting creditors and nice people in the same sentence. I mean, everybody's been very constructive. And the thing is, it depends on how much you owe them, right? I mean, if it's a small supplier, you don't owe them much. I mean, they're like, okay, yeah, it's fine. We'll give you 90 days instead of 30, and you move on. If it's a big supplier, an OEM or something like that, you owe them hundreds of millions, or you should pay them. Of course, that's going to be a more difficult conversation. But at the same time, we are all kind of in the same situation. We all recognize that you can play hardball, but it's not going to get you far. So part of it depends on how much you owe that particular counterparty, and then part of it depends on, their impression of your ability to pay. Because if they don't think you can pay, they're not going to listen to you. They're going to wait for the court, and they're going to get what they can. If they think you can pay, then they're much more willing to work with you. But of course, there's still a limit, because a lot of these, let's say, if you've been funding yourself as an aircraft financer, if you're funding yourself in the capital markets, you have a certain cash flow bogey that you need to hit with these instruments. And if you take too many lease rate cuts, you're going to run into trouble with some of these instruments. They're not going to be able to pay out enough, and you don't want that either. So in some sense, it's, who acts first gets the most. And in another sense, it's, okay, who's going to actually survive this? So, I wouldn't say anybody is necessarily that nasty if they think you're going to survive, but certainly, it's a tough negotiation.
Yeah. I mean, these four credit groups are not totally equal, because lessors and manufacturers are basically completely concentrated to the airlines as customers, right? So when they suffer as a group collectively, that will also then hit the lessors themselves and the manufacturers.
Sure.
Whereas governments and banks are sort of more diversified, and the governments can print money, so they should be able to maybe be more accommodating. But I can see the issues with the lessors and the manufacturers, because whatever concessions they give you will hit their revenue directly.
Right.
Okay, and Hiriam Fanu has asked, presently the estimation is saying that airlines have a minimum of 2 years to recover from the pandemic. Don't you think it will be earlier than that?
I hope it will be earlier. Well, it depends on what you mean by recovery. If you mean something along the lines of 2019 levels, from what we know right now, if there's no vaccine, if there's, we're coming up in flu season, et cetera, I mean, clearly I hope it's much faster than that. I think summer 21 is kind of the next milestone everybody's looking at to see, okay, where are we? How many people are booking? People willing to travel, because we see they are willing to travel. As soon as you open up a destination, they start buying. But the uncertainty that's been created around the quarantine system and the border closures that come, pretty late in the game, you could already be in whatever destination, and now you have to quarantine when you get back. That is what's keeping people off planes, as far as we've seen. So, gosh, I hope it's less than 2 years to a recovery. But that seems to be sort of the standard view. I think IATA is even saying 2024.
Yeah, when the traffic levels will be back to 2019 levels, right? But then, of course, the question is, what are the yields going to be? I mean, is it going to be the same revenue, right? So, who knows?
Well, it depends on how much capacity comes out and stays out, right? Because remember, before all this happened, we had the 787 MAX that was grounded, so there was a lot of capacity that should have been there that wasn't. So in a sense, this could have been much, much worse. And the question is, when that airplane comes back, how many airlines are we going to have? How many aircraft are they going to want to operate? In this business, there's always somebody who's going to sell you a ticket for less than it costs to fly you. And in that case, there's always going to be downward pressure on yields.
Mm-hmm. Saunders came back with a third question. Some airlines in the US are using frequent flyer miles to raise money. In other words, they monetize the frequent flyer miles. Are European airlines doing something similar?
Can you repeat the last part of the question, please?
Are European airlines doing something similar? I mean, are they monetizing their frequent flyer programs?
I have to be honest, I have been up to my eyeballs in my own balance sheet. I haven't really paid attention to what European carriers are doing. I dimly recall that at least one or two of them have separated that business out in their own corporate structures, which is usually a precursor to doing something with it, but I'm not very current with what they've actually done, if anything.
Okay. Christine, do you see that the airline map is going to look different in 2024? I mean, are there going to be consolidation? Are there going to be a lot of new startups? I mean, how do you see this play out?
I think so. Consolidation is going to depend on two big things. First of all, what is allowed to happen, because sometimes with state aid, one of the conditions is you can't engage in M&A. And the second is, sort of who's got the firepower to make the moves that are available. So what comes available and what's actually an attractive asset. So it should happen. The question is, will it? And then when you have, a lot of aid going to the industry, you're basically floating all the boats, right? Even the ones that maybe wouldn't have survived otherwise. And so that has the potential to either delay it or actually make it happen faster, because once the aid is used up and there's no more, some of these carriers are going to be back where they started before this crisis, which was not in a very good position, and we will not have fully recovered yet. So it's going to be a bit more painful.
Thank you, Christine, so much for that. Very interesting. And you're all welcome to dial in again on the 8th of September to listen to Marianne Riggi from Kroll Rating Agency talking about the airline
Thanks very much for having me, Niels. It was great.
Thank you, Christine. Thank you.
Thanks, everybody. And thanks for watching.